11:05 a.m. Do you know where your home equity is? Welcome to the Velocity of Money. Here now to answer your questions about real estate, capital, equity, funding, and finance, your host of the Velocity of Money, Michael J. Barnes.
Welcome back to the Velocity of Money. This is Michael J. Barnes. I am the president of Velocity Financial. I'm also the founder of the Modification Hotline, which is modificationhotline.com. The phone number to reach us in regard to any questions that you would have is 1-888-MOD-INFO. That's 1-888-MOD-INFO. And my welcome back once again, Brett Fallon is a regular guest on the show. He is a registered financial consultant with RG Capital and AIG Financial Advisors. Brett W. Fallon, thanks again.
Hey, I'm glad to be back, especially when we're talking about such an important topic.
Well, and we like to have, it's nice to have the financial advisor's perspective on some of these things. So many people don't have a financial advisor. So for lots of people, thousands and thousands of people listening right now, you're their only option for that. Financial advisory services are typically not for the masses, but again, you're here to help. And your services are available to quite a number of people. You actually work with some of the huge Fortune 500 companies, correct?
Yeah, I do. I do a number of workshops for Fortune 500 companies that are headquartered here around the Valley, and the idea is to help people create efficiency with all assets, understanding that their home and their mortgage is typically the largest asset many Americans have. And if you're not treating that one with efficiency, the retirement accounts and the investment accounts and all the different stuff, that all has to work in concert. So I'm happy to weigh in with information and give you my viewpoints from my perspective.
Well, and we were talking just a few moments ago about utilizing an expert negotiator when trying to do a loan modification. People are getting mail from bogus service sources. We've already covered that one, but from their servicer saying, if you need help with your mortgage, help is here. Give us a call. I'm certainly not going to tell everyone in the world that they cannot do their own loan modifications, because some people are qualified to negotiate on their own behalf, though in my opinion they'll still be emotionally attached to it, and if they hear something that sounds good, that may be enough for them to essentially bite, which is exactly what the loss mitigation department wants you to do.
It goes back to that disinterested third party, that expert negotiator being a key word in that phrase. One of the things that we were talking about, I want to make sure that we address this, especially in this segment, is, we're talking about loan modifications of mortgagees, people that have some financial constraints, some pressure, whatever the source of pain is for them, knowing that this option exists to take an existing mortgage loan and modify it to their best or better interest from what it currently is. So who should and who should not do a loan modification? Let's start with that.
Well, I'll tell you, when we talk, let's start with the people that shouldn't do a loan modification. Somebody that thinks that their interest rate is too high, but they may owe more than their house is worth, and they feel that they may be entitled to a loan modification. Not really a good enough hardship, I should say hard enough hardship for those types of people, unfortunately. This is essentially a handout that's being offered because of some of the malpractices, if you will, that were happening in the mortgage industry over the last several years, with these big, huge banks offering these products, if you will, loans, teaser loans, toxic mortgages is what we call them now. We sure as heck didn't call it that then. When the consumer calls me up and says, oh, I want that 1% loan, that's going to be my ticket. Well, unfortunately, people took those loans, but they didn't realize is someday that loan at this ridiculously low interest rate was going to quadruple on them, and who on earth would have known that the economic times were going to be as bad as they are, and they would have no option of getting out of that loan.
So somebody that simply finds themselves upside down, owing more on their house than the actual value of the house, does not necessarily need to consider a loan modification.
No, they may not qualify on those merits, but in most cases, go ahead.
No, I just want to make a point. I was reading an article in the Wall Street Journal about this concept, and basically the gist of the article was that the average foreclosure on any property in the United States cost the lender $50,000 from start to finish.